Hey there and welcome back to the channel. My name is Kristin Struzyna. This is my husband Hans and we're with the Gunderman Group with Keller Williams Luxury International. So glad you're back for another video. Today we're going to be talking about the conforming loan limits which just got increased. A very interesting topic, especially here in the San Francisco Bay Area.
So what is a conforming loan? Simply, it's one that is going to be purchased after it's closed on the secondary market by Fannie Mae and Freddie Mac and rolled into some kind of a security or what have you. Not the purpose of this video, but what is important to know is there are limits on how big those loans can be. In 2022, nationally, they were $647,200. They are now going up to $729,200. So a pretty significant increase nationally across the board. So regardless of where you live, you're going to see this bump. But what is really significant here locally is that they're going to increase that limit pretty significantly in what is called high cost areas, which are places where the median home value is 115% more than sort of that that national basis. And so in 2022, that loan limit was $970,800, and it is now going up to $1,089,300. That's a pretty significant increase, which if you're doing the math at home, is 50% more than the national limit. That's how they sort of look at these high cost areas. We'll link down below, you can see a map. This is done county by county. And you can see if your county qualifies as sort of the standard limit or that high balance limit down below in the description of the video.
So what we're talking about here are conforming loans, and that, just for clarity, is different than a jumbo loan. So a jumbo loan is any loan that falls above these limits. And the thing with jumbo loans is that traditionally, they're a little bit harder to qualify for. They require higher credit scores for the borrowers, lower debt to income ratios, more reserves. So for people who are trying to qualify for those, it can sometimes be tough to hit those standards. Whereas for conforming loans, the standards aren't quite as strict. They're a little bit more lax on the credit scores, the debt to income ratios, and the reserve requirements.
Now, you have to remember that when you're looking at interest rates, which everybody is right now, you have to know if you're looking at a jumbo interest rate or a conforming interest rate, because the underlying criteria, the risk that the lender's taking for lending you the money, it's different, and therefore that interest rate is going to fluctuate based on, like Kristin said, debt to income ratios, credit scores, all that kind of stuff. So now the fact that this has moved up, this limit, this line in the sand has moved up, what we've found is you can get a total purchase price of about $1.21 million with just a 10% down, or you can get up as high as $1.361 million if you have that full 20% down payment and still be in the conforming loan limit. What that's going to do locally is really expand that price point, because in general, right around that 1.2 to 1.25 price point, anywhere in Alameda County and Contra Costa and beyond, kind of starts to trickle you from that starter inventory into that sort of next tier up. And that's a price point that a lot of people kind of waver. Do I stick with the 2.1 or the 2.2 with the small lot? Or can I push a little bit more and get myself up into the 1.3, 1.35 world? Get that third bedroom or that fourth bedroom or that larger lot or the view or whatever they want. And now you have the ability to kind of push up there and then potentially look at jumbo versus conforming, whereas you just didn't have that option even this year.
So it's going to be really interesting to see the way this plays out here locally in Alameda County. Our prediction is that it's going to allow buyers who are right in that price point, either looking for their starter home or maybe their next level home, it's just going to give them more options so that they can maybe get a little bit more house than they would otherwise be able to with a conforming loan.
And one quick tip, these limits are even higher when you start getting into 2, 3, and 4 unit properties. And so if you want to be a house hacker or you think you want to invest and you want to buy that duplex or triplex, these loan limits have expanded pretty significantly as well. So you can definitely do that if you find the duplex that you really want to live in and rent the other unit out. Not the purpose of this video, but we'll have it all linked up down below if you want to do your own research.
We hope you got value out of this video. If you did, we hope that you'll like and subscribe because we'll be putting out more content like this and we don't want you to miss it. Until next time, we'll see you later.